So, hello. How are ya? How's your mom? If you're logging in, please vote here. The question of the day is, if you had to trade, and I don't need a philosophical debate on what that means. Look, make a decision. If you had to trade today, I would blank the Euro USD. Are you going to buy it or are you going to sell it today? That's all I'm asking. Come on now. So go ahead and please vote. By the way, my name is Wayne McDonell. I'm Chief FX Market Strategist for TradersWay.com, an ECN that allows you to trade Forex, energies, metals, indices, binary options, and all things good and profitable. It's 7:30 in the morning, a couple hours before equity open in New York City on Wall Street. Good time to get together, do a strategy event, realign our satellites. Tomorrow I'll be at fxstreet.com. Let's go. Trade your way at TradersWay with Traders Wayne. Let me remind you that trading and investing are risky businesses, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. You could have made a ton of money yesterday, and you could lose even more today. So always be small, focus on the long term, and never risk money you cannot afford to lose. All right, last few seconds here to play some votes. What would you do today? Would you buy the Euro USD or would you sell the Euro USD? Come on. And while we get that done, let's talk about the Bank of England. They didn't cut interest rates. Cool. Well, isn't that nice? Well, what are we hoping for out of the Bank of England over the next 6 months? What is our currency outlook? Well, I did a video, I don't know, maybe 2 weeks ago, specifically outlining the next 6 and 12 months of the Bank of England policy changes and why they would make these changes and how this would affect the currency, the valuation of the British pound, the Great British Pound. And this kind of just fits right into that, doesn't it? They're not in a situation where they want to cut. Well, that's good. And that means they're ready to receive data that suggests that maybe they should raise interest rates. I mean, they're not cutting. But there's not enough data, right? But not cutting is the first step towards raising. Cool, man. And so I've already told you back in August that in January and February, the world is going to be shocked at how much the UK economy has improved. There's going to be surprise news that comes out in January and February that's just going to rock the world, completely unseen. Be like, but whatever. So yeah, so they'll raise in the first quarter, but we need that data. And I think they're receptive to the positive data. We just need to see it. So that's where I get my alpha from is, well, when will that data show up? And it's sure helpful to know how they calculate the numbers. And that's why I'm saying the world will be shocked in January when the data will suddenly improve dramatically in the UK. And they'll just need to start to normalize. Cool, huh? So watch that video. It's on forex.today. If you want to review, because I think it's called when the Bank of England will raise interest rates and why, I think is the title of the video. I mean, pretty straightforward, right? All right, any last voters? See what happens. By the way, since I can't see what you see, once you vote, what happens? Can you see the other people voting? Can you see the results? I don't know what you see. Just nothing? No results, no results. All right, so I am going to click a button that says no, end voting. And we'll see. But let me tell you, right now, 83% of people, or actually 84% of people have voted. 61% of those votes are to sell the Euro USD. So let me hit the button just in case. 63 now say sell Euro USD. Okay, click end. And dun, 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 dun. There we go. Can you see that? What? Seriously? You can't see the results? It said show results. Huh. Well, how do I do this then? How funny, huh? I think it's supposed to be showing you. You only see thank you for your participation and votes. All right. Well, that's too bad. Maybe that's too fancy of a. Yeah. All right. Well, here's the actual results then. I think I could do it this way. We can do it old-fashioned way. 63% said sell. 84% of people voted. Cool. So thank you for participating. That's kind of fun. Yeah, George, but there is a button that says show results, but I guess it's only to show results to me, which is funny because I can see the results before I even click the button that says show results. So whatever. Stupid programmers. Yeah. Cool. So that's neato. So what in the world has changed, if anything? Have you changed your fundamental bias on anything? All right. Well, let me give you a quick update of what's going on in the world. The S&P 500 is up slightly. NASDAQ down a full percent. 10-year T-note currently has a yield of 2.18%. Oil is at $44.44, up about 0.75%. USD yen up 0.5%. Well, actually more than 0.5%. 0.63% to be precise. Euro USD currently at $1.12. Pretty much flat. The stock market in France down a full percent. Stock market in Germany down 0.75%. FTSE down 1.25%. So France down 1, Germany down almost 1, and UK down over 1%. So stock markets seem to want to head down today. But let's start our conversation in regards to chasing price. You can see we had a big up day yesterday. This is a 15-minute chart. So how have I taught you to draw your lines? Well, if you're a bull and we're making higher highs, what you do is you take your previous high, you drag it across, right? And that should in the future be a buy zone. But I could see how you could lose a fortune in here. Yeah, I look at Dixie, but it's on a different platform. I'm looking at it now. It's actually to the screen to just the right of what you see. But do you understand? Like, if you don't get caught up in the noise, the trading is still quite straightforward, isn't it? If you were trading in the direction of your bias only, but that's a day trade, isn't it? Oh, Alan, that was Abe's announcement. Okay, so anyways, ideally it makes a higher high, and then we buy that dip. Now, I wouldn't call that a higher high yet. I'm hoping, let's say it goes up to 2150, and then maybe down to 21, and then up again. But very similar to the 80-20 rule, right? Let it go up high, let it come back down somewhere between 2100, sorry, 122.00 to 121.80. You buy it up, next target 2150, eventually 2180, back down to 2150, and then up to 2220. So Australia kept interest rates the same, and New Zealand cut interest rates. Very interesting, isn't it? So interest rates in New Zealand now are below 3%, which is quite low, isn't it, for New Zealand? So 2.75%. And the interesting thing, right? The interesting thing is Australia is in a sweet spot, being at 2%, which is still significantly less than New Zealand, and the talk on the street is that the low Aussie dollar is actually helping um, Australia, and that there are signs of hope because of it. So the question is, are they going to talk it down any further, or 70 the floor? And we've gone through a lot of bad news with the Aussie over the last few months, right? Including the Chinese devaluation. And we haven't really sustained a move below 70. So we'll have to keep an eye on that. They don't seem to want to cut anymore. But New Zealand has a ways to go. Cool. All right, so we'll keep an eye on that. So maybe a little more bearish on the Kiwi than we are on the Aussie. Oh, Demeter provided the link for Alan. Cool. So, there's a couple of things going on right now in Japan. One, the government wants to lower taxes, which is funny because they raised taxes earlier, right? But now they're like, maybe we should lower taxes. Yeah. Oh, boy. Of course. So anyway, so the word on the street is Abe wants to lower corporate taxes. Is that good for the stock market or bad for the stock market? Yeah, it should be good, huh? Because they pay the government less taxes, therefore their profit margins increase. So that's what that's all about. And then, I don't know, I can't remember if it was yesterday or today or whatever, but there's also discussions in Japan of increasing quantitative easing at the next meeting, which is, what's the next meeting, YJ? Is it end of October? Yeah, all right, good. Thank you, YJ. Thank you, Adam. So that would be good too, right? And I think we also discussed that in July, right? I think we had a conversation about um, Abenomics clearly not having the effect that they were hoping for, and that they're admitting publicly that they're not hitting their goals, and that they were publishing reports showing that they were not going to hit their goal, right? And now China is devaluing their currency so that they can compete with Japan. Well, golly. So anyways, yeah. So in July, we were talking about at some point Japan is probably going to have to um, add to their quantitative easing. So that's in play as well. Oh, Alan wants even more of an answer than that. Okay, because people wanted to buy the stock market. I don't know. So that's kind of where we sit here on the USD yen. If you follow the line here, beep, 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 right? Ooh, see, hang on. Boop, 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 boo. What? There we go. Do, 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 do. Yeah, the line, isn't it the line supposed to be red? Ask line, red, volumes, line graph, bull candle, bear candle, blah, blah, blah. It's funny, it looks like it should be red. Let's pick a different red, see if it changes somehow. Well, that line doesn't look red to me, but all right. So anyways, you come all the way across, and this is where we are here. So if you're a bear, could you possibly treat this as a top? So what would need to occur for bearishness in um, fundamentally? That's just technical, right? Jim R, you're thinking too broad. We're just talking about this price action level here. Why would resistance hold? And I'm not talking about a complete fundamental change in central banking policy. You're right, that would change a lot, but no. Risk-off sentiment, thank you. That's all I'm talking about. Yeah. So if we have, it seems to me, so, France is now down more than 1%. Germany's down 1%. FTSE's down 1.25%. So now all three European stock markets are down a full percent. So it could be a down day in the stock market here in the United States. Maybe it doesn't have to, but it could be. And based on yesterday's conversation, very often a risk-off mood creates or develops bullishness in the Japanese yen. Okay. Now, what else would occur? Money would flow out of the United States, so that would create dollar weakness. But what about commodity currencies? What would that do to commodity currencies? So then you could do things like what? CAD yen? And I think Asia was down, like Nikkei was down 2% today, wasn't it? All right, so kitty CAD yen. Seems like something could be going on here, no? Yes? What do you think? Could this possibly be resistance? Well, we have the monthly central pivot point seems to be in play here, as well as the weekly R1. Okay? And you might as well just call it 92 psych level, right? Right. Right. Tico says all yen pairs. Well, yeah, and that's what we were talking about yesterday, essentially, is intermarket correlation, right? Currency correlation. Risk on, risk off. So if it's a risk off day, very often the yen tends to strengthen. Now, 3 years ago in that situation, the US dollar would also strengthen. But the US dollar is no longer a funding currency. Why is that? Why is the dollar correlation to the intermarket 180% different than it was just a few years ago? Yeah, Jimmy's right. James says rates are going to rise in the United States. So it wouldn't be a good funding currency as borrowing costs are expected to rise. Did you know Switzerland will pay you to borrow their money? That's funny, huh? So, anyways, we don't know what's going to happen today, but I'm trying to teach you how and why the markets move, and that might be something you want to pay attention to. You know, what's the stock market doing today? What direction is it going? What are the yens doing? What's the buck doing? What do I want to get in on? Okay. Looks kind of interesting in here, doesn't it? Up to the central pivot point, down, 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 down. 55 is in control. That would suggest a rally up to 91.50, maybe 92 again, and then down, 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 down further. Hoorah! Hoorah! You are the one. Do 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 do. Do 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 do. Do 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 do. All right, so check Aussie dollar. Yeah, it's still there. Hang on, Bubba. So one thing that you could do on one of your many computer screens, so you could have a window set up like this. You can get rid of the daily pivots. I understand they're all messy and stuff like that. But you could have a window dedicated just to global stock markets, even though you might not be trading them. You could watch the DAX. This is the German stock market. Let's put it on a 15-minute chart. What do you think? This is approximately the last 24 hours of trading in Germany. Okay. So this is why you should be a client at TradersWay.com, so that you can have a dedicated space for watching global stock markets. Why would you look at the DAX and the FTSE and the CAC and the S&P 500 and the Nikkei? Why would you care about these things? Why should you watch oil prices? Like, why does Traders Way offer you gold and oil? Why? I'm just a currency trader, Wayne. I love when people say that. Because of global money flow, absolutely. And very often, we're bond traders, aren't we? That's where the money's flowing. Into bonds, out of bonds. Into bonds, out of bonds. It's all connected in this fabulous, spoke and hub and cog and wheel and pulley system. Money moves here, money goes there, and money crosses borders, and that's where valuations change. So that's the secret sauce, guys. Well, right? So, Jan, you go to TradersWay.com and open up an account put some money into it, and get yourself a live MT4 account. Okay? And you'll have exactly what I have right here. So you can get a quick look. So I complicate things, obviously, where I have pivot points, daily pivot points, weekly pivot points, monthly pivot points. Is that required? No, because really what you're looking at is correlation. But when you look at this chart here, would you say that traders that trade the FTSE, do they use pivot points? Do they seem to be using weekly pivot points? Yeah. So anyway, some of you guys have like spread betting accounts and stuff, it looks like. So that's why go to TradersWay.com, put $1,000 into a trading account, and use it for intermarket analysis. Right? Right? Spread bet some on one account, and on this one, use it for intermarket analysis. And so you have a spread betting account somewhere, and you have an ECN account here, right? Remember, you'll also have access to binary options. So Lewis says the migrant crisis in Europe in 3 or 5 years, healthcare system will be broken. Should we be able to short the euro? Blah 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 blah. Look, the system was screwed up 5 years ago, and it'll still be screwed up 5 years from now. It has to do with interest rate differentials. We talked about this yesterday. All of that on a humanitarian level is very important. On a global exchange rate basis, completely not important. It comes simply down to central banking policy. That's it. If you think that's going to force the ECB to increase quantitative easing, then it'll change the rate of change or the velocity of the devaluation of the euro, and that would impact the euro. But other than that, I mean, everything's in play already. We know the ECB will continue to do quantitative easing until 2017. On the day they announce they're going to stop quantitative easing because they're starting to see green shoots in their economy, and they're no longer worried about deflation, they're worried about inflation, on that day, start buying the euro. But it's not going to be this year, and it's not likely to be next year. Okay? You have to think purely as an economist now, or as a global global macro economist. On a micro level, yeah. Bunch of migrants, going to cause lots of troubles, going to jack up costs, blah, 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 blah. Yeah. It's not going to affect the euro directly. Okay. So anyways, right? Lower low, up into the sweet spot, right? This is my swing trading technique. I've done 2 or 3 videos on it. You sell somewhere between the 382 and 618 Fibonacci retracement, which is right into here. And we'll see. It hasn't made a lower low, And that's very interesting. Notice how we're bottoming out here, and we got a Stokes kicker to the upside. That looks like consolidation, doesn't it? But notice that today's high is exactly the 50%. Look at this is 50% of yesterday's trading range. Isn't that neat? Yep. All right. So there's a little bit on intermarket analysis. What about oil? Oil. Could you possibly watch oil and trade a commodity currency like CAD? Now, I actually drew this a long time ago. So you can see just this is the last, 3 weeks in here. So you can see we've been looking at this a long time. Zoom in here. And I think this is a very interesting area technically. So if you're a bull, it should be rising soon. If you're a bear, you probably sold the top. Right? Can you see the fib going on? But more importantly, look at the gray line. Now bear in mind, I drew that gray line maybe 3 months ago. Maybe 6 months ago. I can't be certain, but it's amazing, huh? If it wanted to go up, it could go up. And I'll show you, we already have it fibbed to go up. Do 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 do. I don't know why this PC takes so long to add this. I don't think that would be a RAM issue, but maybe. So we have it in here already fibbed up. And I have a orange line on 44 for some reason, which is right the price we have on now. Okay. And these orange lines here is what we did in May or April. April, sorry. Amazing, huh? So we'll see what happens. Yeah, you can see I have 44 as a key area. 42 is the actual bottom, so I wouldn't be shocked if it came down, did a 42, went up. So we'll see. All right, so Aussie dollar, huh? All right. So the reason I do all that first is you have to put things into context. So very often when someone says, "Show me the Aussie dollar," all they see is the Aussie dollar. Well, I see more than just the Aussie dollar. So I look at Aussie dollar only after I do my intermarket analysis and say, hey, is it a risk on day? Is it a risk off day? What's happening to commodities? Right? How's gold doing? How's iron ore doing? How's coal doing? What was the Baltic index today? Baltic dry index down 3%. Okay. So all of that's in my mind before I even look at it. Because whatever you see has already occurred, right? So if it's already occurred, and much of it is irrelevant. So how do you want to play this is the big question. Well, comes down to things like, well, are you already a bull or are you already a bear? This isn't the easy point of view. Let me change this to an hour because we are in, if you follow the gray line, right? That's where we are right this second. Isn't that a sell zone if you're a bear? Okay. And if you're a bull, I wouldn't buy there. You'd be hoping it's going to go higher. You'd be hoping the 21 comes in and knocks this up. A bull, however, should have a plan to buy down in here, but that's going to be a big fib, isn't it? So let's do this and see how far down. So you're basically looking at a 786, but you're not going to want that, so you're going to want to buy at the 618, and that looks like a psychological level of 70. So I think the plan here would be have it drop back to 70 and head up, I think is what a bull would want. And a bear would already be planning out the short, right? And looking at this hourly chart, would it be happy with this oscillator? So yeah. By the way, Igor says buy from 70.40, but like that's in the middle of nowhere. If it was going to go up, why wouldn't it go off 50? See, I think if you got down to 40, that this thing would probably come down to 20. So you're right. You have it as support, but like, all right. But I think people play the psych levels a little more than that. I think they would just, if they're going to buy it at 40, they might as well buy it at 50. If it goes to 40, it probably go down to 25. So, anyways, we'll see. All right, so a bear's thinking maybe, just maybe, this is resistance here, this is resistance here. It was resistance here, 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 here. And now we're overbought. So what would they be doing? Okay. We have stochastic divergence. We're testing the 21. So this needs to break the 21 to the downside, and then make a lower high, and then make a lower low. Okay. Yeah, this says it's going to come up, get pretty close to up in here, and then come down. So up in here, you see there's a cluster of weekly R1, daily R2. So if it's a risk-off day, this will get closer to 71 and then drop. Now, if you're a bull, one thing you could be doing if you're a short-term trader is anytime it's oversold and at some level of support. Oh, where's my mouse? Let's say you're trading on a 5-minute chart and you're a bull. Anytime it's way oversold like this or like this or like this, you buy it. This, not so much. This, yeah. And that's it. That's it. Not much else to it. As long as the price is actually going in your direction, right? So you can see that at some point you would say this is bullish, and if you were a bull, these situations are buyable. Now these ones, not so much, and the reason for it is price is actually heading down. So the price action dictates the direction first and foremost, and then the overbought and oversold conditions are sort of the second component. So as soon as you get like this higher high kind of stuff, then all of a sudden here's the buy on the pullback, here's the buy on the pullback, and here's the buy on the pullback, although it looks a lot more like consolidation at the moment. But if you're on a 5-minute chart, you still should be able to, move your stop to break even by the time it fails, if it is going to fail, right? If you're just going to scalp your way along. But again, for that to happen, you have to have a pretty bad day where, you're buying Aussie dollar to sell the US dollar. Yeah. Better know what you're doing. What might create the Aussie dollar bullishness is that some people would say that we've hit bottom. And that, the Reserve Bank of Australia doesn't seem to be that concerned about, the Aussie. They're not necessarily saying it's still historically way overvalued. So that could be for some the floor. And picking up 2% on the Aussie dollar ain't bad, is it? Relative to other opportunities. But see, you asked for the Aussie dollar, and I just couldn't possibly buy it in any scenario, right? So that's why, I hold all those things last and we talk about fundamentals because I'm like, I don't care what's going on. You couldn't make me buy it. All right, so then you better wait and see what's going on with the USD, right? See, I think it'd be cool to start tiptoeing into some of these things. As you know, we were hoping for a Kiwi move, but we're just not getting the fundamentals to back it up. And as far as your Aussie dollar sell, I've seen better technicals in my days, right? Doesn't seem like the best trade in the world. It's not the worst trade in the world, but I have seen better. So an Aussie here, I think would be very interesting. You are the one, only you beneath the moon and under the sun. All right, so it's a little overbought. So maybe today's not the day. But maybe tomorrow, or maybe in Asia, we try an Aussie Yen Long. Do you remember a couple of weeks ago I suggested you guys open up 2 or 3 live accounts? And one, all you do is carry trade. And the idea here is like, let's say we get a pullback today in New York, let's say, and maybe we buy it at down here, right? And you buy it, you put your stop where you want to put your stop, and then you close, you close, you shut down or you exit your account for the day. And then before you go to bed, you open up the account again, and you're profitable. Maybe you're up 50 pips or something. You move your stop to break even, and you exit the trading platform again. And this time on Saturday, you open it up, and you notice the trade's still open. You're up 82 pips, and you're like, I'll leave it. And then the following weekend, now 7 days later, you open it up, and you're up 210 pips. Lock in 50 pips for your trouble. Exit the trading platform. Come back in a week or two. Come back next month. Yeah. And then you're like, oh, well, now I'm up 600 pips. Yeah, good job, dude. That was hard work, right? Woo! Really had to work. Every 3 weeks, I like to check in on my trades. Yeah. And the good thing is, based on interest rate differentials, you'll probably make 200% return on investment over the course of a year on interest alone. Well, that ain't bad, 200%. Remember, since you have a stop loss in place, it's guaranteed. Nice. So that's how the big boys do it anyways. S&P 500 coming down pretty harshly, as we've discussed earlier. And S&P 500 is testing an old low and could possibly make a lower low. That would generate US dollar weakness for the day. And that could give you a pound dollar up But the news that's coming out shortly is to do with Kitty Cat. So I'll bring up Kitty Cat now, but you'd be remiss to ignore the pound dollar in a scenario where you think the dollar might weaken, right? I mean, you may be bullish on the British pound. What? Could be a rabbit, could be. So what do you think? Is this going to be an opportunity to break out of the range? Probably not. What a nice range it is, huh? You are the one. Zoop. Delete. What? Is that the only one? No. There it is. Delete, delete, close. All right, so let me click a plus, zoom in here.
Canada, their capacity utilization for the second quarter expected to downtick to 81.7% from 82.7% prior, while the new house price index for July expected at 0.2% month over month and 1.3% year over year.
This is TradeTheNews.com.
Sell benchmark 5, 7, 10, and 30-year debt for BIIB.
$275,000, right in line with consensus estimates. 2.26 million, a little better, higher than the 2.25 expected. Import price minus 1.8% month over month, minus 11.4% year over year, and Canada housing starts 0.1% in July month over month and 1.3% year over year. Capacity utilization at 81.3%, a little lower than the 81.7% expected. We also saw some back revisions. Initial jobless claims down 1,000 to 281,000. Continuing claims up slightly to 2.259 from 2.257.
Did he say the CAD news? So anyways, housing price index up 0.1% month over month, up 1.3 annually. So not by much. And then Q2 capacity utilization, 81.3. So it could have been a lot worse for Canada, let's put it that way. Import prices still falling. Imports have fallen by more than 11%, almost 11.5% year over year. Amazing, huh? It's still oil affecting that. So you want to check out the Bureau of Labor Statistics? So all imports down 1.8. Fuel imports down 13%. Wow, huh? Non-fuel 0.4. That would be normal, right? Our exports are down a little bit. Okay, but not bad. 1.3%, right? Our AgX 2.6. That's a pretty bad number, but look at this. Oil prices 13%. Wow, huh? August 2014 to August 2015. Look at that. 48%. Wow. Isn't that amazing? So isn't this funny? You see how they have the data all written out? This is probably what you'll read in the Wall Street Journal tomorrow. They'll just copy and paste this. Parts of it. They won't even print the whole thing. Come on, come on, come on now, touch me, baby. So look at how we actually had an increase in May. So a couple of things this could reflect. One, obviously falling oil, but also the purchasing power of the U.S. dollar, as seen in falling valuations of other currencies, right? Because you could possibly look at this chart and say, this is the price in US dollars for German-made BMWs. You could just say, well, that's the dollar going up and the euro coming down. Yeah, very much so. Look at the change in import prices, guys. Do you think statistically this is important? Yeah, interesting stuff, huh? So our exports are down 7%, 6%, 6%, 6%, 6%, 7%. We're losing 6 or 7% monthly, right? Which is a lot. But import prices are falling even faster. So the United States is still sort of a net winner, maybe? Or let's say they don't lose as much as everybody else. Do you think this is inflationary pressure? Well, so, you know, interesting trade data. It'd be interesting to read updated current account data. So anyways, Could be worse for Canada, but it certainly wasn't good news. And dollar hasn't changed much at all. In fact, hasn't changed at all, US dollar. So what's happening here? Yeah, Canada's losing more value. Yeah, yen got stronger, but why? Why did we talk about that 45 minutes ago? And what has occurred to be the catalyst for that change that we were expecting? Yeah, the S&P did make the lower low like we talked about just before the news. And that does tend to strengthen the US dollar. Isn't it nice to talk about this ahead of time? In fact, it was the topic of our conversation yesterday. Because I'm going to trade you till the heavens start to rain. If I was a little girl and I were to marry, I would marry a currency trader than any other chappie. He would pip and I would pip, we would pip together, waking up in the middle of the night, pipping one another. All right, just following the line here. So we did make a bit of a lower low, as we talked about way up in here. We'll see where it goes from here. Doop. 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 Zoop. Let's see. Yeah, I think they had it here. In the morning, in the morning, in the morning by the sea. By the sea! In the morning, in the morning, in the morning by the sea. I make money. That's the most fun ever. Forever. Forever, ever. Besides that, volunteer for charities. That'd be about it. Golf. Well, I golfed twice this year, so that doesn't sound like the right answer. Watching CNBC? Nah, not sometimes. Yeah, cigars. That's not really a hobby, though, is it? I guess for fun, I study global macroeconomics at Harvard. Maybe that's what it is. Yeah. Yeah, I guess that's what I do for fun. That's my fun stuff. I have homework to do today. Yay! Am I married? Oh yeah. Been married 200 years. Vampire Slayer of pips. Give me your pips if you want to live. I don't know. To be honest with you, I'm in a funny place where, besides like wife and kids kind of stuff, nothing else really brings me any satisfaction. I'm wandering around like nothing else makes me happy except hanging with you guys. That's it. I hang with you, I hang with my wife and kids. The rest is work. And I kind of walk around like, cigars used to be great. They don't seem to be as great as they used to be. Having a glass of wine or bourbon, that was good, but doesn't seem to be as good. Video games, that used to be good, but doesn't seem to be as good. I'm just sort of walking around like, I think I'll go back and sit in front of my charts. Yeah, I like traveling. I just don't travel as much as I used to. I'm working on some big deals that, in time, probably next year, I'll end up traveling a lot again. Okay, fine. But I have a feeling like it just won't be as fun as it used to be. Maybe that's my midlife crisis, right? Just like, let's just sit down, make some money. That's the most beautiful thing about Forex, though, right? Is like you could just be kind of wandering around the house a little bit bored, and you're like, I think I'll just go mess around with the charts, maybe throw down a couple of scalps, you know, just sit down, pop out 20 pips. You're like, yeah, that was good. Paid for dinner. Right? Yeah, Zeal. Yeah, absolutely. Look, I've been doing webinars like this for what, 10, 11 years or something. I very rarely miss anything, and I used to travel constantly. And I just do the sessions from the hotel rooms. I still have to do my analysis, no matter where I am in the world, right? So I'm just used to it, and I have gone on vacation with my wife and kids, and I just get a larger hotel room, so I have a bedroom dedicated for trading. And when I travel, I have three screens. They're pretty young, Felipe, so we haven't really got there yet. They have enough. My kids, they're in third grade and they have like 3 hours of homework every day on top of the community stuff that they do. Um, they're busy, man. How do I travel with three screens? I can answer that, and then I think we're out of time, but hang on. Let me pull up Facebook. I think there's one on Facebook. Hang on, it wants me to log in. All right, I'll log in. In the morning, in the morning. Come on. Photos. Here. This is me in Canada a couple of years ago. I spoke at a conference up there. Oops. And I don't think you can quite see it. Come on, go back. Can you get rid of this stupid thing? Pfft, Facebook sucks. All right. So anyways, I think you can see that. Um, is it clear? Can't. I don't know if you can see that or not. So this is just a hotel room I'm in, and this is my laptop. These three screens at the bottom. That's my traveling setup. Isn't that neat? And then above is just the TV in the hotel room. So that's my travel setup, which is pretty good, right? So the nice thing is there's only one plug for that setup. So my laptop is plugged in to the wall, and the screens are plugged into my USB ports. So I only have one wire basically. Well, I guess you have to count the USB wires, right? But they're behind, so it's super cool. Like you don't have to like plug in the monitors into the wall and then plug the monitors into your computer, and then you got to plug the computer in the wall, but there's not enough outlets, so then you got to find another outlet, and no. So I plug the computer in, attach the monitors into my USB ports, boom, right? And that's just my MT4 setup. So isn't that cool? So I take that with me. And the nice thing is it fits into my computer bag, right? So like at this particular conference, it was pretty funny. One of the things I did is I spoke on a panel. I think the guy, what's his name, from cyber trade. I think I forget his name, Faust or something. Anyways, I think he was the guy leading the panel, is me and a few other people, right? So you got to be a big dog, right? So we're getting set up for the front of the crowd, and the moderator gets up, opens up his laptop. The other speakers on stage like, oh, I didn't even bring my laptop. Am I going to need a laptop? Right? They're just kind of sitting there with a pad of paper, like just sitting there, right? And then all of a sudden and I'm like, oh yeah, reach into my bag, laptop, reach in my bag again, screen, reach in my bag again, screen, boom, turn it on. Don't even need to plug it in because everything's running off my laptop. So I just have my laptop and my three screens, and everyone's like, oh my god. I'm like, what? 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 You don't have three screens? Oh, it didn't even occur to me. Uh, oh, really? You don't have one of these? Must suck to be you. Well, that's why you do it, isn't it? Hey, do you need my pencil, dude? Here, you can use my pad of paper and pencil. Yeah. Who makes them? Oh, let's see if I can remember. It's something like AOL, or obviously not that AOL. It's something like that. OALA something. I don't know. Hang on. Can I even reach the closet from here? Like I said, I don't travel anymore. So that setup was probably 3 years ago, 4 years ago. I mean, I just don't travel anymore. Just don't need to. Oh, here's one. Oh, I got them laying around. AOC. There we go. Oh yeah, you got them. Yeah, you got a 1649, so it's a 16-inch, 17-inch. Yeah. So what it is, guys, is the computer screen itself, external video card built into it. Oh, what's this? It just switched. That's me doing Bloomberg again. Again. You know what? I'm going to save some of these and put them on my little webinar stuff. Cool. I guess I'll do that on my own time. All right. Well, hey, let's go. I'll see you tomorrow at fstreet.com. Cool. And remember, open up a TradersWay account. We're trying to earn your loyalty by investing into you first and foremost and upfront. So when you feel confident enough in your trading skills, you should pay it back, dude. Open up a live trading account at TradersWay.com. Be your trading partner for many, many years to come throughout your successful trading career. So peace on earth may be with you. May your profits be above average. I'll see you tomorrow. Cheers.